Hi everyone, welcome to my channel. In today's video, we are going to solve February-March 2022 AS level paper, variant 12, duration 1 hour. Question number 1. Which actions are taken in respect of the total of a 3-column cash book at the end of an accounting period? Cash and bank column, discount column. First option given, cash and bank column will balanced, it's correct, but discount column we will not balance. Second option B, balanced, discount column will be totaled. So in the cash book always cash and bank column only will balance, discount column will total and transfer to the discount allowed or discount received account. Correct answer is B. Question number 2. Which item is an example of a capital expenditure? Cost of repair to an office building. This is not capital expenditure, that is revenue expenditure. Then cost of repairing business name on delivery van. Again revenue expenditure. Legal cost paid to purchase an office building. Capital expenditure means expense paid to purchase the non-current asset. So legal cost means it is included in the cost of purchase of an asset. So the correct answer is C is the capital expenditure. Question number 3. On 1st July 2021, Tim bought a delivery van 10,000. He paid an additional 900 to have racks fitted inside. Then to set inside a rack he paid 900 and 800 for years insurance. Tim provides for depreciation 10% per year. A full year depreciation is charged in the year of acquisition. What was the total for expense recorded in Tim's income statement for the year ended 30th September 2021? So here they are given the information about one delivery van. The van price is 10,000. They paid an additional charge 1,900. So total price of the van is 10,900 is the cost. Then they have paid 800. This is an expense. Tim provided the depreciation 10% of the year. A full year depreciation is charged. Depreciation is always charging on the cost. So depreciation plus expense will be included as the total expense in the income statement. So here the depreciation is 10%. So 10,900 multiply 10% is equal to 1,090 is the depreciation plus the expense 800. Expense will not take full 800. This expense they are paid for 1 year insurance. They paid the 1 year insurance. So we take only how many months they are using the delivery van. When they purchase the delivery van on 1st July 2021. when their the accounting period ends September. July, August, September, 3 months are there. So only 3 months expense only you add with the depreciation. 3 months expense is equal to 800 multiply 3 by 12 is equal to 200 expense. So 1090 plus 200 is equal to, what is the amount? 1290 is the total expense. Correct answer is A. Next, 4. A business has year end of 31st December. It purchased non-current asset on 1st January 2020 for 100,000. The asset was depreciated using reducing balance method. What is the percentage of depreciation? 20%. It was sold $40,000 on 1st January 2022. What was the loss on disposal? So first we have to calculate the total depreciation. Depreciation on, it purchased on 1st January 2020. So 2020 and 21, 2 years depreciation we have to calculate. So first year depreciation, the cost is 100,000. So first year depreciation, 100,000 multiply 20 divided by 100 is equal to 20,000 is the first year depreciation. Second year depreciation, reducing balance method means we calculate on net book value. Net book value means cost minus depreciation. Here the cost is 100,000. 100,000 minus 20,000 is equal to 80,000. So we have to calculate the depreciation on 80,000. 80,000 into 20%. It will be 16,000. So total depreciation is 20,000 plus 16,000. So that will come 36,000. So what is the net book value now? The net book value is 100,000 minus total depreciation we calculated 36,000 is equal to 64,000. That is 64,000 is the net book value. But they are sold for, what is the price they sold? They sold for 40,000. But the net book value is 64,000. It is less. So the loss is 64,000 minus 40,000. 64,000 minus 40,000 is equal to 24,000. So the correct answer is 24,000. Answer is option B. Next, question number 5. What is entered in the sales ledger control account? Sales ledger control account means total trade receivables or debtors account. So they are given the option cash sales. Cash sales never enter in the sales ledger control account. Increase in provision for doubtful debts also. Provision will not enter, only we enter bad debt. Return inward or sales return. So third one only correct. So option D is the correct answer. Next, question number 6. A trial balance included a suspense account, the bank balance of $28,400 had mistakenly been entered as an overdraft. Bank balance is the debit while overdraft is the credit balance placed in the credit side. What is the mistake here? Actually, they should enter 28,142 on the debit side. But by mistake, they entered the amount 28,142. So here, the mistake is we have to first remove this amount, overdraft amount, and add our actual bank balance amount on the debit side. To remove bank overdraft from the credit side, we have to put it on the debit side of the trial balance, and the bank balance also we have to put it on the debit side. So we have to enter 28,412 on the debit side and 28,142 also we have to put it on the debit side. There had also been an addition error. The debit side of the trial balance had been undercast. Undercast means that is less than the actual amount, $450. So that also we have to enter on the debit side, 450. So what is the total amount will come? 57,004 is on the debit side of the trial balance. So what is the question they are asking? Which entry in the suspense account will correct this error? This is debited, so it will be the trial balance is debited with suspense account. So suspense account will be credited with 57,004. So the correct answer is suspense account credit 57,004. Option C is the correct answer. Question number 7. Which statement is correct? The balance on irrecoverable debt account is carried down to the next accounting period. Irrecoverable debt carrying to the next accounting period. Bad debt is just close the account, we never carry down. The balance of irrecoverable debt account is treated as an expense in income statement. Yes, this is a loss. So we will treat as an expense. The correct answer is B. 8. The following information is available for business at 31st December 2021. They are given 1st January opening balances they are given. Then they are given closing balance. So first what is the question? The total amount paid during the year is $11,500. What is the amount to be included in the income statement for general expense? So they are asking the amount. What is the amount will include in the income statement? Income statement only current year amount only we show in the income statement. So actual amount they paid is 11,500. 11,500 is the actual amount paid. Now they are given general expense. General expense in arrears means accrued. General expense in arrears 1st January. Opening accrued and opening accrued they are given and closing accrued they are given. Then what they are given? Opening advance and closing advance. Outstanding means arrear or outstanding means the service is done but the payment is not done. So we include in the current year income statement. But this is the opening outstanding. Opening outstanding always we deduct. Opening outstanding we deduct. And while opening advance, opening prepaid means last year the business paid some amount for this current year. So that we should add in the current year income statement. Then closing arrear. Closing arrear means this year unpaid amount, outstanding amount that we should add. And closing advance. Closing advance means for the coming year, the following year, so we should deduct. So we do 11,500 minus 420 plus 240, then plus 720 minus 120 is equal to, what is the total amount comes? 11,920. So the correct answer is D. Next. When would the year-end value of inventory need to be adjusted? The year-end value, when we have to adjust the value? When inventory has not yet been paid. The inventory is not paid, this is not adjusted. When selling price has fallen below cost, because inventory always value at lower of cost. So if the selling price is less than the cost, inventory will value at the selling price. So the adjusted will be 2. Next, when the owner has recorded taking goods for his own use during the year, that always we deduct. It will not be adjusting in the inventory valuation. So only 2 is correct. So the correct answer is C. Question number 10. A business had a draft profit 250,000. The following errors were discovered. Depreciation 25,000. The figure should have been 40,000. But by mistake they entered only 25,000. Closing inventory for the period undervalued 10,000. What was the correct profit for the year? Here, actual depreciation is 40,000 but they ended 25,000. Depreciation is understated. So, depreciation expense understate means profit must be overstated. So, our profit is 25,000. 25,000 and here actual depreciation 25 ended 25,000, but the amount actual depreciation is how much? 40,000. So that is understated the amount. 40,000 minus 25,000 is equal to 15,000 is understated the expense. Expense understated means profit will overstate. So we have to deduct this amount from draft the previous profit. We deduct 15,000 and closing inventory period was undervalued. Closing inventory means we are removing from the cost. So that is understated. Closing inventory understated means cost will overstated. Cost is overstated 10,000. Cost overstated 10,000 means profit must be understated. So this 10,000 we have to add back. So add plus 10,000. So the answer is 245,000. Option B is the correct answer.